Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. It's been a while since we talked about any momentum stock picks, so let's do that right now with Mike Vodicka. Mike is our momentum stock strategist at Zacks.com. You've had a couple of winners here this time around. You've written about recently. DineEquity Incorporated, DIN, the ticker symbol, is one of them. And for those people who aren't familiar with the corporate name, they operate Applebee's and IHOP restaurants.
Yeah, that's right. I'm sure a lot of our viewers have heard of Applebee's and IHOP. This is basically the company that's responsible for operating and franchising. They do kind of a combination of both. They actually franchise 1,600 Applebee's and they run 400 of themselves, and then they franchise about 1,400 IHOPs. Company has a market cap of about $822 million, so it's not a huge company, but decent size. This kind of plays into what we've seen recently with a little bit more consumer strength and playing off the retail sector. Consumers are getting a little bit more comfortable spending money. And then a lot of these companies that did struggle over the last year, they were so focused on creating operational efficiencies, cutting expenses, that's really driving their bottom line. We saw that show up in Q4 results for DineEquity in early March. The revenue was actually mostly even year over year, but they were able to produce a really strong earnings surprise of 76 cents per share. That was actually 3 times the Zacks consensus estimate. So that's a really strong surprise. And then over the last year, their average earnings surprise is about 159%. So you can tell the company has done pretty well in a challenging environment. Again, their quarter was driven by expense management. Their operating margin was up 270 basis points to 14.4%, so they're really performance there. They do have a little bit of debt long term. They have about $1.8 billion, but they're aggressively paying that down. They paid down $217 million of that over the last year, so they're headed in the right direction.
I was going to say, we all have a little bit of debt. What the?
Yeah, these guys have $1.8 billion.
Yeah, well, what's little for some, not little for others, but
Yeah. So off the nice quarter, we saw a really good jump in estimates. The current year added 72 cents. It's at 271. The next year estimate added $1.13. That's at 317. That's a 17% growth projection. In terms of the valuation, we're trading it at about 17 times right now. It's mostly in line with its peer group in the S&P 500.
Stock price climbing.
Yeah, and then we saw shares really break higher on the nice quarter, right at about $34. And then since then, we've topped up at 48, so we've got some nice upward momentum.
All right, and then there's Deckers Outdoor, DECK, the ticker symbol, footwear company.
Yeah, I'm not sure how many our viewers have actually heard of Deckers, but I'm sure they've heard of a couple of the brands that they specialize in. First one, their biggest is Uggs boots.
Yeah.
Those are very trendy and very popular. And then another line they have is the Teva sandals. So I'm sure a lot of our viewers have heard of those. But this is a fairly big company, a market cap of $1.88 billion, so not exactly small. And again, this kind of ties into what we're seeing with the consumer story. Over the last year, we've seen consumers, they've told us that we're willing to spend money on brands that we really appreciate, kind of specialty brands, and I definitely think Deckers falls into that category. They just reported their Q1 results on April 20th, and they had nice revenue gain of 16% year over year. They had a 51% earnings surprise, so that was really solid too. Their UGG boots were actually up 14% year over year to $104 million. That's their main segment, their main revenue driver. And then getting into, again, we're talking about cost control. A lot of these retailers have been really focused on cost control. That definitely worked in their favor too. They were able to boost their gross margin over the quarter to 50%, which is really solid. They don't have any debt, which is great. $317 million in cash on the balance sheet, so they're looking strong in there too. We've seen some nice movement on estimates. The current year is up 47 cents, and since off the earnings surprise, the next year estimate is up 43 cents. That's a 10% growth projection. That's pretty solid too. Yep. And then what we've seen here play out on the chart is shares have been really aggressive since bottoming out with the market in March of 2009. Currently, we're trading at about 158. The all-time high is about 165, 166, so it's within striking distance of that number right now.
All right, do you own either of these two?
No, I don't.
Check out other Zacks Rank Buy stock pick ideas on our homepage, especially if you're accessing this video outside of our homepage at Zacks.com. We put 4 new stock pick ideas up there for you daily, one in each of the investing categories written about on Zacks.com. Mike's category Momentum is included. With Mike, I'm Terry Ruffalo.